What's up guys, Kevin Cage here with another crypto update. In today's video, we're going to dive into the importance and show the benefits of having a tax-free trading account in crypto, and compare the pros and cons and look at the earning potential of a Roth IRA versus just standard trading where you're paying short-term, even long-term capital gains. So I hope you find this video interesting, and all of this information is still very important to know whether or not you're interested or even have a retirement account in crypto. And then we'll be diving into iTrustCapital, which is linked in the top of this YouTube video description, being one of the very few options that US investors have today to be able to grow and even trade your crypto 100% tax-free. And hopefully soon a lot more jurisdictions. So we have billions of dollars in transactions, thousands of accounts created, and over 2,000 5-star reviews. And you guys already know I've had a Roth IRA with iTrustCapital since January of 2020, so coming up on 4 years. And before iTrustCapital, I was with another crypto retirement account. I'm sure you guys are familiar with IRA and other organizations, but the fees were crazy: custodial, management fees, annual fees. And the fact that iTrustCapital is one of the largest and most successful US retirement accounts in crypto is a big deal, specifically because it is $0. There's no monthly startup, there are no hidden fees, there are no custodial fees or management fees. And they got some big funding back in 2022, and they were valued at $1.3 billion. And all there is a 1% transaction fee whenever you buy and sell. So very similar to Coinbase, but remember in previous videos when we showed a debit card transaction purchasing Ethereum, the fee overall was 3.8%. And once I have money in here, I can grow this. I can trade as many times as I want and I won't pay any capital gains. Unlike other crypto exchanges, Coinbase, Binance, Uphold, Kraken, every single gain you make, you are paying either short-term or long-term capital gains. And the typical average for short-term capital gains is about 22%, so 1/5 of your money, almost 1/4 of your money is gone. Now tax rates for long-term capital gains are a bit better. If you just bought an asset and held it for over a year, whether it was 1 year, 2 years, 3 years in the future, you could pay 0% in capital gains, which is great, but this is dependent by how much you actually earn. If you made some decent money or a lot of money, you're still paying 15 to 20%. So that's another consideration. You might have to pay more in taxes, but at least you can fully control your money. You can spend it how you see fit, rather than that money being in a retirement account until you reach a certain age. So there are absolutely pros and cons, but this is why I do both. And you can start a Roth IRA with iTrustCapital with as little as $1,000. And this is one of the very few legitimate platforms that actually utilizes a qualified custodian for enterprise-grade, offline cold storage for your holdings. So I like to diversify my investment vehicles. I have a Roth IRA, I also have short-term trades and swing trades, but then I also have long-term holdings for those moon scenarios in the future. So I dance between all three, and each one has their own pros and cons depending on where we're at in the market cycle. But bottom line, I want long-term exposure in this asset class, and this is a great way for me to keep that long-term vision by having a retirement account. With any holdings that I have long-term faith in the future, I'm not thinking 6 months or a year out. I'm thinking at least 5 to 10 years out. And for anybody familiar in the traditional markets, there's none of those crazy fees. I can trade 24/7 right off my phone and even go right into the US dollar whenever the market gets ugly, and I can fulfill all of these orders in about a minute. Okay, so let's get into the charts and show some examples. And we know crypto is super volatile. It is not like the S&P 500. The S&P 500 is safe. It'll likely be here over the coming years, provided, debt doesn't crash or there's another global economic meltdown. And just because something's been around for 100 years or a few hundred years doesn't mean anything. Anything can happen. Risk is absolutely everywhere. There is no guaranteed investment anywhere, and tomorrow is never guaranteed. Some conservative investors like an annual average of 7%. It takes them 10 years to double their money, but if that is their risk appetite, they have enough funds, that's fine for them. For me, I at least want to allocate some of my money in higher risk plays with higher risk reward. So we know Ethereum, from its last cycle low to its high, it almost did a 60x return. We can see 5,800%, so just about a 59x. Do you know how long it would take for the S&P 500 or even other stocks, even smaller caps, to see a 58x return or 59x? So these are the opportunities that crypto and Web3 bring, because since it's open and decentralized, depending on how decentralized you think it is, it allows everybody to become a venture capitalist, allowing everyday people without having to be an accredited investor or a multimillionaire to have exposure in assets that can see those VC-like returns of 10 to 100x. And my thesis for the crypto asset class is that overall is going to grow substantially larger than the growth of other asset classes. We know equities, the bond market, and then global real estate are all over $100 trillion at least, and crypto is sitting at $1 trillion. Many industry experts expect the value to be transacted over some of these public networks to go up orders of magnitude. So is it that crazy to see, even if we stick in this ascending channel over the coming years, to go up to 3 trillion, surpass that, go to 5 trillion, 8 trillion, even 10 trillion plus in the coming decades? And we're still in this space pre-regulation. We don't know the true winners of enterprise utility over the next 5 to 10 years. Does Bitcoin create another all-time high price? Probably. Does Ethereum? Probably. Do many other assets follow suit and potentially break into new highs if Bitcoin and Ethereum do that as well? There's a good chance. And just thinking about inflation, a lot of investors making 7% or even 10%, how is that really holding up against inflation? Are they going to be seeing more of a push towards risk on assets to get that higher return? And I've spoken to some people that say, oh, I don't want to invest or I don't want to trade because I don't want to pay taxes. Paying taxes is a sign that you're making money. If you run a business, you're paying taxes. If you're not paying taxes, you're not making money. And as you're making a lot of money, then you can look at different vehicles or strategies to lower your overall tax liability. But paying a lot of taxes is not necessarily a bad thing. It's a sign that you're making money and you're actually profitable. If you have a net loss in investing, you're not paying taxes. Remember, you're only paying taxes on your net gain, so only if you are actually profitable, you're paying taxes on those profits. So here's a quick example. Say there was an investor that started buying Ethereum as it was going up into an all-time high price. They started paying attention to crypto in 2021. Say they bought around $4,000 of ETH, around $1,500, and they saw their investment do over a 2x or more than double, and they said, you know what, I want to get out because even looking at last cycle low, this thing did over a 30x return and I entered as it was going up. Let's say they sold 100% of their position at $3,500, they didn't sell the top, it kept going up, but just waiting a year or two later, we can see they can buy after a 50% crash. So if they sold here, they watched all of the biggest crashes and decided, hey, we're well into this bear market, I've been studying the cycles now, and we can see we're down 50%, I'm going to re-enter. Buying back with that position after a 50% crash means that you actually double your entire position. Even if prices went lower, you actually 2x'd your position from 2.85 Ethereum to over 5.7. And we're just using Ethereum as an example with something with a strong track record, a huge ecosystem. We're not going to talk about microcaps because they're just crazy. Some of them can absolutely explode and eclipse any of these examples, but they're also a lot more risky. So you doubled your position, and even just looking at Ethereum, believing it goes back to an all-time high price, which I do believe, and I think it eclipses this all-time high and at least goes to like 6 to 8K conservatively, not financial advice, you'd potentially get another 2.7x on your actual investment and make some great returns. The cool thing with iTrustCapital within a Roth IRA is you'd be paying 0% in capital gains, so you're not concerned about that whatsoever. Whether you just buy and hold and wait for long-term targets, or you're actually doing some swing trades depending on where we're at in the market cycle, you're not worried about tax liability. Now, potential profits can be even crazier if you do things like compounding, which are super risky, but during a bull run, things are in your favor, specifically when we're actually trending upwards. Let's say that you had XRP at 40 cents and it did a 10x to $4. So say you 10x'd your 20K and you have $200,000. If there were laggards in this market that still had 10, 50, 100x potential and you rolled that investment over and got another 10x, so now your 200K is $2 million, you'd make a couple $1 million in crypto, which is still an amazing win, but you would also pay a lot in taxes. So although retirement accounts aren't perfect, I like having that option and opportunity, and we have about 35 different assets available in iTrustCapital today. And even looking at the total market cap for crypto at 1.27 trillion. Apple, a single company's market capitalization, is double that of the entire crypto asset class. And because iTrustCapital connects to Fireblocks and BitGo, some of the largest institutional custody providers in the space, we can see they support a lot of assets. So they have wallets for Atom, HBAR, Algo, Casper, AVAX, BNB. They have US dollar trading available for different assets. We can see XRP here, and this is on BitGo's website. And they also have staking available, and we know that DeFi and staking abilities are coming to iTrustCapital. And then Fireblocks is absolutely massive, plugging right into iTrustCapital, and look at the list of crypto assets that are supported. So I know we have 30 plus different alts on iTrustCapital, but I do expect this to get to 50, even 100 in the future. And if you're interested to learn about 10 very important benefits to understand of having a crypto Roth IRA, be sure to check out this video I uploaded last month. I will link this in the top of the video description. So I hope that some of you guys found this video interesting, just considering short-term, long-term capital gains, the value of a crypto retirement account. It is not for everybody. I don't bet the farm and put all of my money in it, but it is another vehicle I leverage to ensure that I get 0% capital gains with some of my holdings. And if you create a free account using the link below, you also get a $100 funding reward. Crypto's never popular after every multi-year bear market when prices crash. And the majority of investors that typically follow the herd will not enter anywhere near the bear market lows. They historically enter after hundreds of percent, if not well above 1,000%. And I think it's just a matter of time for history to rhyme. Hope you enjoyed, guys. I'll catch you in the next one.